This problem involves calculating various ratios to help you evaluate the financial health of a company. So not only can you evaluate the company, but you also have various ratios which you can then compare to industry standards if you can find these industry stats, which in most cases you can. So the first one we're going to look at is your profit margin. So your profit margin is equal to operating income divided by sales. So that's $12,000 in operating income divided by our sales of $48,000. So that gives us an operating income of 25%, or sorry, a profit margin of 25%. The next one is the asset turnover. Asset turnover is sales, which is $48,000, and that is divided by total assets, which is $20,000. So that's 2.4 is your asset turnover. The next one is the residual income. So with residual income, what you are doing here is you are looking at the level of income that you have left over and above your targeted rate of return on assets. So you have your operating income, which we are told is $12,000, and the target rate of return, our target rate of return is 18%, that we're given, and our total assets are $20,000. So that gives you a residual income of $8,400. So what this is telling you is the company is actually generating operating income of $8,400 more than what is required to achieve the company's rate of return of 18% on assets. The next one we're going to calculate is your economic value added, commonly known as EVA. So here that's calculated as operating income minus your tax rate, less your total assets minus total liabilities times your weighted average cost of capital. So the first piece of information we're going to plug into the formula is your $12,000 operating income. So the tax rate we're told is 20%. So 1 minus the tax rate is going to be 80%. Then we have we're going to subtract then our total assets minus our total liabilities. So you have assets of 20 less the liabilities of 6. This gives you $14,000, and your weighted average cost of capital is 15%. So with all of that information plugged into your formula, that is going to give you a total of economic value added of $7,500. So that concludes all 5 parts of the ratios demonstration.